Hello and welcome back to Author's Note. Selling the pound has become one of the most popular trades in the global foreign exchange market, as sentiment on the UK has worsened this year. Sterling is now trading at its weakest level against the US dollar in more than 2.5 years, and is at its lowest level against the euro in 15 months. The Bank of England has signalled it would like a weaker pound to help UK exports. But how far will the pound slide from here? I'm here with David Bloom, Global Head of Foreign Exchange Strategy at HSBC. David, can you tell us why is everyone so negative on the pound at the moment?
Well, we would argue there are three main reasons. One is the external reason. We thought there'd be this hard landing in China, we were told, and there'd be a US fiscal cliff and the euro was going to break up. And under such circumstances, the pound looked like a safe haven bet and a sure thing. But those have changed. Those risks have not materialized. And therefore you're asking yourself, why am I holding sterling? Secondly, we're worried about the fiscal side still in the UK. And third is the monetary side. So that's a poisonous cocktail for sterling that we're finding.
And of course, we've seen a big slide this year. But let's just bring up our first chart here and put that slide in context slightly. If we look here, we've got sterling against the dollar going back to 2007. You can see that big slump in sterling in the financial crisis just after Lehman Brothers collapsed. And since then, it's kind of been range trading. It almost doesn't really look like it's lost that much, I would say.
So there's two ways of looking at it. If you excluded that big drop, you'd say, actually, sterling's been trading sideways for 3.5 years. And this is a big move.
Yeah.
Put it in its historical context, which you've done, you say, this is a small little move. So which one is it? Are we at the beginning of another big leg down? Or is this a very big move compared to the last 3.5 years? If it's part of the historical side, then we think sterling's got a lot more to fall. But we're a bit loath to go the full Monty on it. And so we're saying that sterling could still fall another 3 or 4% this year.
And what would that take it to? Because we're at about 152 against the dollar at the moment.
Yeah, so we're 148 for the end of the year and about 91 on euro sterling, but that's not the end of the story. We still think it'll drift lower into 2014. So we've got a weaker pound, and the Bank of England don't seem to mind too much.
Well, and that's one thing we should look at, in fact, is, of course, part of the reason that everyone has been selling sterling a lot more in the past couple of weeks is the signals that we've been getting from the Bank of England. We had their quarterly inflation report out last week, and then just a couple of days ago we found out that the Monetary Policy Committee are actually a lot more inclined towards doing more monetary easing than we might have thought. And if we bring up our second chart, I think we're showing the change in inflation in the UK over the past 5 years. And we have been worrying about higher inflation, but if we look at that chart again, it's a lot lower than it has been. Should we be worried about inflation getting a lot higher from here?
Well, if, as you said, the Bank of England's not worried, I'm not worried. So therefore I can sell sterling. If they told me I'm really worried about inflation and you sell sterling, the immediate impact is import prices, higher fuel prices, higher energy and food prices. You get higher headline inflation and the central bank resists it. But if the central bank says, I want a weaker currency to spur on exports, but I'm not that worried about the inflation picture, it's going to be above target, but I'm not particularly concerned, then they're giving us the free option to sell the pound, both because it'll help the growth situation and they don't really mind that it's causing higher headline inflation. So happy days, we'll sell sterling.
And just finally, currency wars, very topical at the moment. Where would you put Mervyn King in terms of the spectrum of central bankers and currency wars?
Well, we wouldn't have put him very far, and we've got this currency sterling, which even though it's fallen quite a long way, we think is still on the slightly overvalued side. But they're starting to step up the rhetoric. We saw New Zealand step into the game very recently, and the UK slowly but surely are saying, we want a weaker pound. Well, the problem with the currency war is everyone wants a weaker currency. Why is it a war? Because you're stealing growth from someone else when there's deficient demand in the world.
And do you think we're on track to win?
We're on track to win on sterling because it's falling, but the problem is as more countries get involved, Japan, New Zealand recently, then you're back where you started, because if everyone devalues their currency by 10% tonight, it's exactly where it was now.
David Bloom, thank you very much. So sterling still has some way to fall.